Hello, everyone. This is week two of the White Knuckle Traders trading community. My name is Jason. I am your host today. This is our second week. We started this new community as a means to recruit recreational traders, stock and option traders to our community to collaborate, learn, and execute effective trades so that we can make money and be more prosperous. Last week in our meeting, we talked about some new positions that we were going to take along with expectations of the market moving into the month of December. Some of the positions that we talked about getting into, which we did, were SoFi, Robinhood, both of which had great weeks this past week, making back over 20% of their losses from the November pullback. We talked about taking positions in Amazon, IREN, IREN, and also Nvidia. And of those five stocks, Nvidia was the only one that had a flat week, but all the other four, IREN, Amazon, SoFi, and Robinhood, had great weeks. Collectively, we made 27% last week, so that was extremely exciting, and we're looking forward to a great December. We finished November on a high note. The last five trading days of the month were up. And so we're going into December with some momentum. The S&P and the Nasdaq are not at their all-time highs. They're still short of those, and they're getting close to important resistance levels. They're both about 2% shy of resistance levels, both on the SPY and on the QQQ. Some things to look at. So this is all about talking about what we expect in December. It's going to be a short and concise audio here for you. In the month of December, seasonality wise, over 60% of the time we see gains in the month of December. We expect this December to be the same. We expect the stock market to advance to all-time highs before year's end. Our prediction is for the S&P 500 to finish somewhere between 7,000 and 7,300. We look for the Nasdaq and the QQQ to reach all-time highs again, and we also believe the Dow will also reach all-time highs before the month of December ends. I don't believe it's going to be a smooth upward melt. We're going to see basically some choppiness, particularly the first third of the month as we go into the FOMC meeting on December 10th. But then from there, we expect a pretty rapid advance towards the end of the month. This is just our thesis based on a dovish Fed, a rate cut coming here that we expect to happen on December 10th. And then, of course, seasonality wise, being that we're closing the year into Christmas, a lot of the hedge funds are still trying to make up for lost ground from earlier this year, as they didn't take part in that V-shaped rally that we saw really from the end of April all the way into October. So, wonderful opportunity here, we believe, to make some money here and close the year. So, we're going to talk about some positions that we're going to look to add on to and what our thoughts are on a couple of stocks. We're also going to talk about what we think for the early part of 2026 as we go into the new year, etc. So here we go. Just some thoughts. So, looking at some of the positions, looking at some of the stock positions that we talked about last week, SoFi is currently trading at $29.72. It gained over 20% this past week of Thanksgiving, which is incredible. It's got pretty strong resistance at 30. Its all-time high is $32.70, roughly. It's trading right in the middle of its Bollinger Bands, and a couple of big things could really propel this stock beyond its all-time high in the month of December. So notably, a possible inclusion in the S&P, which could occur on December 5th. If SoFi is included in the S&P 500 as part of their rebalancing on December 5th, 2025, this would absolutely send the stock to new highs, probably somewhere between $33 and $36 by year end. Our target on it right now is right around $32 to $34. If they don't get included in the S&P 500 on this rebalance, we likely think that SoFi will be included on it in 2026. It might cause a little bit of a pullback in the stock, though, if they don't get included in 2025. But by month's end, we still see it being at new all-time highs between $32 and $34. So our position, we sold puts on it last week at $22. We sold puts on it at 24. And what we're providing is not financial advice. It's just what we're doing for educational purposes. But our new position that we're going to look to take on Monday is going to be a sell put $27 strike for December 26th. And it'll pay somewhere between $84 and $88. And these numbers will change as the market moves going into Monday open. But this will give us a potential return of investment somewhere between 3.1 and 3.3%. going into month's end. So we're going to pick up some sell put contracts there, sell cash secured puts. Robinhood, it finished the week at $128.75. It's still below its 50-day moving average, which sits just a little over $132. It's right in the middle of its Bollinger Band. Also moved about 20% last week. It also formed a joint venture with Susquehanna International Group, and this is going to expand their prediction markets, allowing them to scale and monetize prediction markets. Goldman Sachs reaffirmed a buy rating on them with a $175 target. Robinhood and SoFi have both been extremely great stocks to own in the year of 2025, and I believe they're going to be extremely great stocks to own into 2026. Robinhood has got so much upside to it. We have a number of cash secured puts. We also have leaps on Robinhood. Our position for Monday is going to be to add more cash secured puts, looking at the 115 strike going out to December 2020, December 26, 2025. The 115 cash secured put would give you a potential return of about 3%. And in both of those positions, whether it's the 27 strike in SoFi or the 115 strike on Robinhood, in either one of those positions, we'd be happy to be assigned 100 shares because we see tremendous upside on both stocks going into 2026. Another stock to talk about is Amazon. Amazon reached all-time highs after their earnings report in early November. They climbed into the mid 250s, fell all the way back to the mid two teens, and bounced off of their 200-day moving average. They're sitting at $233 a share right now. Amazon is just under its 50-day moving average. We think Amazon is going to be an absolute beast in 2026. We have leap options to 210 strike going out to January 2027. And so we're going to continue to monitor Amazon as we think it's going to climb somewhere close to 300 by the end of 2026. Lots of upside potential there. We also are holding cash secured puts in Nvidia at the 170 strike. Nvidia traded flat last week. It's really been in a consolidation zone for about 5 or 6 weeks now, trading between 170 and 184. It did get a little pop after their unbelievable earnings report in the middle of November before pulling back quite substantially. And there's been a lot of pressure on NVIDIA due to Michael Burry and others with the AI bubble talk. But NVIDIA's earnings are incredible. They still have the most in demand chips, and we expect them to really break out here in December. Our target by end of December puts us with them somewhere close to $200 per share. Another stock that we've been monitoring closely in the white knuckle trader community is Meta. Meta obviously crashed after their earnings report at the end of October. Their earnings were sensational. However, their capex spending is expected to really ramp up in 2026 to $100 billion. This obviously sent a lot of shockwaves through the investor community. Lots of unnecessary selling took place on that stock. It gapped all the way down below its 200-day moving average, down to near $581. It bounced off of that low 4 times, and then last week ran up some 6%, and it's trading in the mid 640s. And we really want to see Meta break through the 670, which would be its 200-day moving average. That would really give us a bullish signal, and we expect it to do that before the end of this month. We expect Meta to be trading somewhere between 670 and 690 by the end of December. We think Meta is going to have a great 2026, and so we're extremely bullish on it as well. As we get into early 2026, obviously in January, there's going to be tax loss harvesting going on. So, our initial thought, and we'll give further clarification on this in the weeks to come, but we believe the early part of 2026 could be a little choppy with some selling as a result of that. We're also closely monitoring what's going on with Japanese markets. As you know, the Japanese hold the largest amount of U.S. debt and treasury of $1.2 trillion. Japan just started a new stimulus package in their country, which has actually caused their interest rates to go up. And as a result of that, it certainly can have a rippling effect into the U.S. economy as well and affect our interest rates. It's not something that we think is going to be a short-term issue in the month of December, but it's something we're going to watch into the early part of 2026. Last time we saw this happen with Japan, in relation to their rates and their stimulus packages, it caused a massive drop in our stocks. back in August of 2024. So it's something that we're watching. But our thoughts and our analysis, this is week two. We really like SoFi. We like Robinhood to end the year, NVIDIA, Meta, Amazon. We're going to look to diversify our portfolio as well. We're going to look to enter into some alternate fuels like UUUU, and that's a uranium company. We're going to look to diversify our portfolio into the oil as well. And I know oil is very much out of favor, but going into 2026, we're going to look at stocks like Chevron and Exxon to add them to the portfolio. We're going to look to add NextEra Energy to our portfolio. We're also going to look to add NRG, which is going to be a big part of powering the data centers. And then we're also going to try to increase our position in gold and silver. With interest rates coming down and a more dovish Fed, we expect gold and silver to continue to accelerate towards all-time highs and record highs into 2026. And so these are some of our thoughts going into week two. Like I said, we made 27% this past week, Thanksgiving week, in our first inaugural week. We're looking forward to gaining more members into our community. We want people to interact and learn as a community. Generally speaking, we like selling cash secured puts. We like buying leap options when the conditions are favorable to do so. And we also like to entertain buying stocks that make sense to hold for long-term investments as well. And so give us your thoughts, give us your analysis in the comments below. Subscribe, join our community on Telegram. More to come in the coming days and weeks. And that's all for you right now. Take care, everybody. Thank you for listening.